Yo, what's up everyone? My name is Andrew Warren, and if you enjoy videos like these, please make sure to smash that like button. I'll make sure to cover more stocks in the future. Just whatever you all seem to be requesting, I'll definitely take into consideration for these videos. So if you would like to see more videos of me specifically focusing on one stock, please make sure to smash that like button. It really does help me out. But jumping right into this content, today we're going to be talking about Disney stock and whether I think it is currently worth purchasing. Now, if you take a look at the past week's chart for Disney, it has done very, very well, in which it gained 7.16%, and for the past month, it is just a little bit above zero at 2.49%. But still pretty solid. I'll definitely take that over a negative percentage any day. It's always good to be in the green. But if you take a look at the past 3 months, it is minus 22.57%. The past year is minus 18.14%. And for the past 5 years, is minus 1.99%. So we really do got to talk about that figure for the 5 year, because that is one thing that I really focus on when I discuss whether a stock is currently worth purchasing. So the past 5 years is super crucial. But basically, I think there are some good aspects of Disney right now, especially Walt Disney owns Marvel. Marvel is huge. It's one of the easiest money makers in the movie industries. I've always never been a huge fan of them, but there are so many people out there that like superhero movies and supervillain movies, and they're fairly easy to make and pump out, as well, as you can see with all of the releases we've had over the past years, as a lot of the times it's not like super complex storytelling, but a lot of people find them very entertaining. I know that like Marvel superhero movies are one of the few like genres that is super saturated, but people still love seeing every single movie. It's not like zombie films where everybody sort of rolls their eyes and there's only like just a few of them that people really like that go to watch it. So Marvel is a huge aspect of Disney, a definite moneymaker for them as well. Then you also have the Disney theme parks. Those are super popular, probably the most iconic theme park out there, and I think it will always be relevant regardless of the Rona situation. I think once the Rona situation is over, things will start to go back to normal, and in my opinion, like I said, Disney theme parks will always be relevant. It's always going to be something that people want to take their kids on a trip to either go to Florida or one of the other theme parks. Disney culture has just been embedded so much into our society. Over the past 100 years, you think about all of the Disney cartoons, it's just become so iconic that it's not going to go out of our memory or even out of future generations' memories, because we'll pass it down to them. So the theme parks are super essential for Disney in addition to Marvel. And another aspect of Disney that I believe certainly helped the stock out a lot recently and within the past year a bit is because of Disney Plus. Now, Disney Plus is sort of similar to like Netflix and Hulu, and in my opinion, it's actually fairly popular. It's just as popular, if not more popular than Hulu in my opinion. And of course, I think it gets a lot more coverage and customers compared to something like HBO Now, where you're paying for one channel. So I would say it's up there with Amazon Prime. I'd say it's about the similar level of Amazon Prime. Netflix is still king in my opinion. I don't think anything will take Netflix off the top of the food chain. In my opinion, that's the best streaming service. No commercials, quality content, and original content. But like I said, Disney Plus is a huge aspect of this stock, and it plays a certain role in this, especially right now with the whole Rona situation. There's a lot of people out there that probably have Disney Plus and Netflix, and it's just one of those things. If you want your kids to watch some good iconic cartoons, you got to subscribe to Disney Plus. There's not really a lot of content for younger individuals on Netflix. I mean, there is, but there's not as much as there is on Disney. Disney keeps it pretty censored and family friendly, considering that they have theme parks, and it's always been related to children. So it's a much more like child friendly platform for streaming services, but it's also like wholesome content that even adults enjoy as well. So it's a good middle balance, and that's something that you don't get as much with Netflix streaming services. But then you also have original content on Disney Plus like The Mandalorian, and then I'm assuming much more pretty cool content that's coming as well, including TV shows and movies. And you could say hypothetically, like within this whole quarantine Rona situation, obviously people can't gather together and go to theaters. So if Disney wanted to release a movie on time, on the date that they have been saying for the past like year or so, then they could simply just release that on Disney Plus and sort of just blow up that subscription service in a good way to where people will subscribe to it, because it's like going to a theater. It's exclusive content that you only get to see on Disney Plus. So that's almost like a future-proofing type thing, to where even if theaters don't become a thing or a popular thing to do in the future, they still have their platform to release their content on, and to keep people subscribed to that, because a lot of people like superhero movies. Like I said, a lot of people like that Marvel content. So I do like the future proofing in Disney Plus. And then also another aspect of this stock is, as it says right here, experiences and products. So not only do you have theme parks, but you have Disney toys and merchandise that you can purchase within theme parks or online or in stores as well. In addition, it says there's also Disney domestic television stations and radio and network stations. And just going back onto the theme parks, as it says right here, there is the Walt Disney World Resort in Florida, the Disneyland Resort in California, and then there's also a Disney Resort and Spa in Hawaii. And then you have even the Disney Vacation Club, which is for the Disney Cruise Line, and also the Adventures by Disney. And that's another aspect that I forgot to mention as well. Disney has cruise lines, so you're even getting coverage on the cruise line aspect, and that may be a partial role, not only theme parks shutting down, but Disney Cruise Line shutting down as well, which played a significant role in its drop right here ever since February 20th. And then another thing is Disney also distributes under Walt Disney Pictures, Pixar, Marvel, Lucasfilm, and Touchstone banners. And I forgot to mention that as well. Not only do you have pretty much the rights to Marvel, they also have the rights to Star Wars. So two of some of the most iconic franchises of all time are owned by Disney. And they have a $197 billion with a B market cap. So this has always been one of those things that I was sort of confused on, because if you look at stocks like Apple, let's go ahead. I have a pretty significant holding in Apple. Apple has always been something that I have grouped around Disney in terms of popularity, but as you can see, Apple is pretty much 3 times the value of Disney, and I always thought it was strange that Disney is such a low price stock. You would think, at least in my opinion, that it would be around like the $200 range or something like that. So it was always surprising for me to see that Disney stock is either like $120, or as of right here you can see is about $141. But I always thought that aspect was interesting. And then as well, on top of this, just to provide a little bit more information, you have a dividend yield of 1.74. So you'll get a small, nice dividend every quarter of a year, which is always a nice bonus on top of the normal growth as well. So just to discuss whether I think Disney is a buy currently, I have to be completely honest with you all. If you're familiar with my channel, you understand that I base a lot of my purchases and a lot of my ideas on whether something is worth purchasing on its average past yearly growth for the past 5 years. And then I'll also take into consideration the past year's growth as well. So for example, I'll show you one of my favorite companies to invest in currently, and one that I think will do very well in the future, and that is Microsoft. As you can see right here, I own about $18,459 in this stock, and that is 100 shares currently. It's 25% of my portfolio. So as you can see, I have to have faith in this stock long term and every single year, or I wouldn't have put this much money into it. But for example, if you look at the past 5 years growth rate, it is 281.50%. And in the past year, even considering the most recent drop, the recent crash, we are up 47% in Microsoft. That is extremely significant. So when I think about whether another stock is worth purchasing, I simply look at my other options right now and I think, okay, would my money do much more for me if I put it in this stock compared to Disney or compared to whatever I'm thinking about? And although diversification is excellent, sometimes the answer is your money might be better worth putting into another stock, even though you like having different stocks and it's maybe a little bit more interesting. The end goal here is to make you money and also make sure that you make money for the long term. You want a stock that you can hold for 40 years that will still do well 40 years later. So that's a huge aspect that everyone needs to take into consideration. You have to consider, is this money better put into another stock that will do better for me in terms of making me more money? Now hold up just yet. This does not mean that I'm saying don't invest in Disney. Let me emphasize just a little bit more on this concept. We're going to check out the VOO ETF, which is basically consists of some of the top 500 companies. I think it's like specifically 508 companies in the stock market. So if you look at VOO, it basically mirrors what the general stock market trend is. Whatever the general stock market is doing, that's what VOO is likely to look like. And so as you can see, if we don't take into consideration with this recent drop, at the peak, VOO was up 60% for the past 5 years. However, VOO is usually considered to grow on average 10% every year. So basically the goal for the past 5 years is to get 50% or more out of a stock, because VOO is considered fairly safe. So there's really no point in investing in a stock that doesn't get 50% every 5 years or 10% every year. And that is because VOO is just such an easy stock that you can lean back on, to where it's almost guaranteed to get 10% every year. Of course, unless a big crash happens, but that's still the average, and it's considered easy because that's all you have to do. Just simply put the money in the stock and you can pretty much expect a 10% average every year over time. So every time that I look at a new stock, for example, if you look at Disney, and I will emphasize, I'm not saying don't invest in Disney, I'm just saying I look at the past 5 years, and I won't even take into consideration the drop. I'll take into consideration the last day before the drop and then the peak as well, which we'll look at. So even at its best point for Disney recently, it was only up 24.64% over the past 5 years. And if we look at that peak on November 29th, I think that was near when Disney Plus got released. It was up 35.95% for the past 5 years on Disney. So if we use our example that I referenced earlier, Disney is not even at the peak, Disney is not even close to 10% every year or 50% every year. And especially with the most recent crash, it hasn't recovered too much, and we are in the negative. We haven't gained anything. Imagine holding $10,000 in Disney stock on May 8th and then it being worth less than what it was worth 5 years later. That is what I would call an extreme disappointment. However, the question is Disney stock a buy right now? So we have to take into consideration not only the future long-term, but short-term as well. It's important, if you want to get some nice short-term gains, you can take a look at its most recent point before the drop. So it was at 138 and the value is currently at 109. I will say, if you're looking for some short-term gains in the short term, not in the long term, I'm not talking about holding this stock for 5 years. I'm talking about holding it until it gets up near this $130 price or $141 price or $151 price. Once it nears somewhere in that baseline, like that $130 range, that is probably the ideal time to sell, because you held it up to get those short-term gains, and then you can go ahead and sell it, because I don't think this is a very good long-term stock when you can buy other stocks out there like Microsoft that have been consistently gaining like at least 40% per year. There's no point in using the capital that you have into something that will not build your wealth as much as something like investing in Microsoft may do. But however, if you're looking for a nice short-term play in addition to some of your other long-term plays, then Disney may be a good buy, but you have to take into consideration if that is worth your risk. And also, I will expect once the Disney theme parks start to open up, I think we will see some significant gains within the next few weeks or so. So I think at least we're going to get like 10% gains at least within the next few weeks for Disney. I think that's very likely if all of the theme parks start opening back up, and then news of the cruise lines eventually opening back up as well, probably a few months from now. That will definitely help out the stock. And then of course, if there's any new Marvel movie announcements or Star Wars news or anything like that, will certainly help out the stock. So in my opinion, my ultimate judgment on Disney is, I'd say it's definitely a relevant stock worth buying if you do your research for the short-term gain. Like, for example, if we get once again in this baseline of $130 to $140, I think that would be a good time to sell, because you pretty much got this gain gap between here and that last low point. So you got the gains within that gap. But long-term, I don't think this stock is a very good buy when you have a lot of other options out there that focus more on tech and sort of future-proof your investment. But that is simply just my opinion. And if you do enjoy videos like these, I'd really appreciate it if you dropped a like on it. Make sure to smash that like button. And if you would like to begin investing, feel free to use my referral links in the description and the top of the comment section for Robinhood and Webull. If you sign up with my link, we'll both get some free stocks. And here's just a few examples. Some of them are pretty good value, like CZR, $10. But anyways, I hope you enjoyed this video, and I hope you have a fantastic weekend.